Take a closer look at just what was moving the markets. Julia Lee joins us from Bell Direct. Julia, the Aussie share market ended lower. Of course, all eyes on those all-important US non-farm payroll numbers out tonight.
Friday, the Australian share market was really just treading water ahead of these numbers out in the US. In fact, if we have a look at volumes throughout the day, they were extremely low, and we only saw $4 billion worth of stock trading hands. So though the market declined, we did see it on extremely light volumes. All eyes are on the US tonight. Last night we saw the US markets lower, the Dow down by 0.3%, and markets around the region just waiting for these US non-farm payroll numbers. And they're going to be really important towards setting the direction for the market next week. If we have a look at where the Australian share market finished up, all week we've been trying to break that 4,350 point mark on the close, and you can see it's acted like a ceiling for our market this whole week. On Monday we looked like we were going to test it, and then all week we've been trying to break that mark. So still a significant level for the market next week. We saw the material sector really weighing on our market today. I guess because of those US non-farm payroll numbers, what we have seen is a run into some of the safe haven assets like the US dollar, and a stronger US dollar is bad news for commodity prices. So we saw BHP Billiton and Rio Tinto down by about 2%. Banks also losing ground. In fact, if we look across the market, we did see losses in the energy sector, the material sector, the consumer discretionary, as well as the consumer staples sector, the financial sector and the telecom sector. In fact, the only sectors to actually close in the black today were the industrial healthcare as well as the information technology sectors. Before the week, the market did see a gain of 1.3%, which is good to see, but those US non-farm payroll numbers are the key to performance next week.
Certainly. Now, let's just pull out some of the corporate news that we had. Suncorp shares down after that profit downgrade.
Suncorp came out with a market update, and the market really didn't like the news. There were a few big hits that they outlined. If we have a look at their bank impairment charge, it was $690 to $730 million, and that was basically in line with what the market was expecting. Suncorp is also Australia's third largest insurer, and they've been hit with a few difficult conditions in the last year. They've seen very volatile markets, so it would have been quite difficult to get a decent return out of their insurance portfolio. But they've also been hit with some big weather events as well, so they've got some reinsurance costs involved there. So they're predicting that net profit will be between $340 to $360 million. That is significantly lower than the previous year, which came in at $556 million. So Suncorp Medway, if we have a look at its share price, this is its share price since January, and you can see in the last week its shares have been doing extremely well on speculation that ANZ may be interested in its banking assets, but today we saw its shares pull back down by 1.3%.
And just finally, ResMed shares doing well after its result out today.
ResMed shares bucked the trend today, and their shares actually rose quite strongly. They came in with a record result for the quarter as well as for the full year, and really just demonstrate the performance of defensive stocks in good as well as bad economic times. It's been a pretty difficult year for most companies, but ResMed has fared quite well. If we have a look for the year, their revenue is actually getting close to that $1 billion mark. So it came in at $920 million, which was up by 10%. They did see net profit as well as operating income up by 33% for the year, and for the quarter they saw an increase of 53% in their net profit result. The earnings per share for the year came in at $1.90. That was just a little bit ahead of expectations. The consensus was for $1.89. Looking forward, it does look like ResMed's future looks pretty bright. The outlook statement was quite rosy, and ResMed is one of these companies that is expected to actually be get an advantage from the US health reforms going forward. But if we have a look at the Aussie dollar, it's quite high at the moment, so that's going to be a consideration if it stays at these levels in the coming year. But altogether, ResMed up by 2.9% today.
Julia Lee, as always, thank you so much for that wrap.
Thanks, Friday.